Voyant is a financial planning modeling software that allows you to model all aspects of the client's life, including key events in their life, retirement, their goals and intentions, and so forth. Voyant will then produce a chart and a graph which will give you and the client clarity about what their financial future looks like, answer the question, do they have enough money, and allow you to guide the client in the right direction and show what the possible outcomes are based on the advice that you're considering for the client. The key advantages of Voyant include Voyant's super quick and easy to prepare the client scenarios. On average, it will only take you 10 or so minutes to prepare a client scenario. Voyant is very visual. The charts and graphs are very easy on the eye. They look great. And it's also very easy for the client to understand what's happening with some very simple explanation from the advisor. Voyant is very quick to update when you make a change to the client scenarios. And because of this, Voyant is very much a client-facing tool which enhances the client experience, as well as being a great tool for your projections and your statements of advice. The best way to illustrate Voyant is to run you through a fairly simple client scenario. So what we've got here is John and Mary, age 57, wanting to retire at age 65 and wanting to know what they should do to ensure they have enough money. There are two ways to get the client data into Voyant. You could do that via an integration with one of our integration partners, including Xplan and Fin365, or you can manually enter the data into Voyant yourself. The way you do that on the dashboard here, the main screen, if I click on the green plus button, and what I encourage you to do is start at income and just move across to the right to ensure that it captures everything. You can also add trusts and corporate entities. Once you've got all the data into Voyant, if I click on the down arrow here, it then expands these tabs and you can quickly check to make sure that everything's correct. And we can see with this client, their retirement goal is to spend $100,000 per year. Once you've got the data into Voyant, what you should then do is click on the timeline. The timeline provides a visual in terms of what the client's goals and intentions are going forward. You can see we've got icons here to represent the client's ideal retirement date, and I have this model running until the client is age 90, which you can change to whatever date that you want. Now let's assume the client has two more goals. The first goal being they want to upgrade their car in 2 years' time, and the second goal being they're funding their daughter's university expenses for the next 4 years. So I'm firstly going to add icons to the timeline to represent those goals. So we'll do the new car first, the way that we do that. So in 2 years' time at age 59, I'm going to double click here. On this new screen, we'll change the name to new car. We'll choose the car icon, click done, and we'll see the icon pop up on the screen there. Now the second goal is the university expenses for the next 4 years. That will end at age 60. So we'll double click there. We'll call this Uni Ends. We'll change the owner to Sarah. It doesn't impact the modeling, it just changes the color of the icons. We'll choose the graduation icon. Once you've got your icons onto the timeline, we then need to add a cost to these two goals. So we'll do the new car first. The way that we do that is I click on the green plus button. We'll click on goals here. So a goal in Voyant is just an expense that's going to be incurred at some point in the future. The new car purchase is a one-off expense, so we'll choose this milestone goal. On this new screen, we'll change the name to new car. Client says they need $50,000 to fund that new car, and we just need to tell Voyant when that $50,000 is required. We do that by clicking on timing. That expense will not happen at retirement. It's going to occur where we've got that new car icon. I'll just click on that and drag it into that new box. When you add an expense into Voyant as a goal, Voyant will then calculate the probability of achieving that goal. With the second goal, the university expenses, we'll also add that as a goal. The university cost is a yearly amount that needs to be funded, so I'll choose this pre-retirement goal. We'll change the name to Uni Expenses. Let's assume the clients are tipping in $15,000 per year. We just click on timing. That expense will start now, and it'll end where we've got that graduation icon. A real benefit of Voyant are the charts and the graphs it produces, which helps bring everything to life for you and the client. So if we click on Let's See here, single chart, we can then go into the charts. So this first chart's the cash flow chart. Ultimately, it shows you and the client how long is our money going to last. And just to explain this chart, the thick black line that you see each and every year, That's all of the client's outgoings. That's living expenses, debt repayments, goal funding, tax they pay on their income. So it's everything that's going out. Each column represents 1 year. Where that column is blue, it means the client has enough money in that particular year to fund their expected outgoings. And where the column is red, which it is from age 84 onwards, it indicates we've got cash flow shortfall, so we're running out of money at this point. And we can illustrate that further by going to the assets chart. When you're on this chart, always click on the word details. And what this chart shows is the projected value of their assets over time. And I just moved my mouse over whatever year you want to check out, and the numbers in the box here will update. What you can also do on this chart, if I click on the home here, just removes the value of the home. So we've just got the liquid assets now, the cash and the superannuation. Their values reach a peak here at retirement, and then the values start to go down as they're spending that money to fund their retirement living expenses. The superannuation is expected to run out at age 84, which corresponds with your cash flow chart, where you've got cash flow shortfall from age 84 onwards. And what you can do, we can bring up two charts at once. We've got the cash flow chart at the top here, the assets chart down the bottom. Remove the value of the home from the assets chart. Mr. and Mrs. Client, the superannuation is expected to run out at age 84. We've got cash flow shortfall from that point. If I go back to the cash flow chart and click on the word details, this is now showing how we're funding the expenses each and every year. So each color represents a different source of income. On the left here, the dark blue, we've got the employment income. In year 3, we've got a spike in the expenses due to the new car purchase. The aqua color here, taxable savings, that's short for any drawdown of any cash or investments in the client's name. So Voyant's grabbing some of that cash to fund that car purchase. From age 65 onwards, yellow is the superannuation drawdown, and the darker blue here is the client's age pension entitlement. Now, I've built this scenario on the assumption that this is a new client going through the advice process. I've called this scenario the current position. When I look at the cash flow chart here, I can see the client has a savings capacity or a surplus income, $24,000 in that first year. And that surplus is there virtually each and every year whilst the client is working. So as an advisor, you'd want to capture that surplus and redeploy that to the right areas to ultimately improve the client's financial position. Now, the best way to do that is to create a copy of what you've done. So I've done that already. I've created a second scenario, which I've called with advice. And with this new scenario, we can start to allocate the surplus to the right areas. How Voyant initially allocates the surplus, for all the people you've got set up in the plan, Voyant will set up these cash sweep accounts. The cash sweep accounts are just normal bank accounts that earn interest at a rate that you apply. The purpose of the cash sweep account is that's where Voyant will pay any surplus into, unless you direct that surplus elsewhere. So right now, the $24,000 surplus in year 1, plus all the other surplus in the other years, is being paid to the cash sweep account. So what we have here is a client age 57 wanting to retire at age 65. From a strategic point of view, what you may do, you could go into the client's superannuation fund. So we'll go into John's super fund first. We might salary sacrifice an amount into superannuation. I've done $10,000 here. You might do the same for the wife. Let's assume it's $5,000 per year. Of the $24,000 surplus in year 1, we've used up $15,000 of that on a pre-tax basis. So the remaining $9,000 or $10,000 is being paid to these cash sweep accounts. What you can then do, if I go into John's cash sweep account, on the left here, we've got sweep options. We can then tell Voyant what to do with the remaining surplus. So I've chosen to pay the surplus onto the home loan. And once the home loan's fully repaid, assuming there still is a surplus in the following years, we'll put that into superannuation. I've also done that for Mary's cash sweep account. So we've now fully redirected the surplus into superannuation via salary sacrifice and also made some additional repayments onto the home loan. And what we can then do is go back into the charts and see the impact of that. And if we look at the cash flow chart here, it is now all blue, which indicates the client is unlikely to ever run out of money. And when you've got two or more scenarios, so we've got the with advice and current position, we can start to compare the outcomes of those two scenarios. So if I click on Let's See, Compare Plans. So for the cash flow chart here, we know under the current position, we've got cash flow shortfall. Through the advice that we're considering for this client, we've removed that shortfall. So the client can clearly see an improvement here. And the client knows at this point that blue is good and red is bad. You may also want to compare the asset values under the two scenarios. So all you do, you just put your mouse over whatever you wish to compare. So let's say at retirement, we can see an improvement in their asset values. And also for this client, we made those additional loan repayments using the surplus. So you may want to compare the debt levels under the two. And we can clearly see under the with advice scenario that this Westpac home loan is potentially paid off a lot quicker compared to their current repayment schedule. What Voyant allows you to do is bring everything to life for the client. They can clearly see the potential outcomes of the advice and guidance that you're providing, and most importantly, see what their financial future looks like under different scenarios. And when you show this to the client, their eyes are just glued to the screen because it's all about them. The client's engagement goes through the roof. Another cool thing about Voyant is the speed at which it updates. Now, to illustrate this, I'm just going to boost up this John's superannuation fund to $800,000. Now let's assume you're showing this to the client for the first time. If we go into the charts, we can see a cash flow chart that's all blue, which indicates they're unlikely to ever run out of money. And if I show the assets chart, we can see at age 90, there's still a stack of money left in superannuation. Now, when the client sees this for the first time, they might say to you, geez, we didn't realize we're in such a good position financially. What if we just retired a little bit earlier? So if you get a question like that in the meeting, what you can do, you can go back, you can go into the timeline, and they might say to you, what if we just retired at age 60 instead of 65? So you can pick up the retirement icons, move them to age 60, and then go back into your charts, and everything is updated instantly. So there's no loading speed issues that you may experience with other modeling softwares. And what it also allows you to do is respond to questions like that straight away with the client and discuss the outcomes. And we can clearly see here that the money potentially runs out at age 80 if they were to retire at age 60. Or you might be in a review meeting and the client might say, that car that we need that next year. And Sarah, she flunked her exams. We've got another year that we need to fund. So you make your changes, you add your updates, you go back to your charts, and you can have that discussion straight away with the client. So Voyant is very quick and very responsive when you make a change. What you can also do with the client, which is great for the client experience, is run these insights here. So insights are very quick calculations you can run in front of the client, which allows you to show them or tell the truth about their financial position. So if I just quickly go back to the timeline and move their retirement date to age 65, we know if they retire at age 65 that they're unlikely to ever run out of money. For this particular client, their retirement goal was to retire with $100,000 per year. If we go into insights, one insight that you could run, which is very good for your pre-retirees and retirees, is this retirement spending insight. And what this calculates is, well, how much can we actually afford to spend each year in retirement? So when we get to the end, there's not a dollar left in liquid assets. So what this is saying is, well, the client wants to spend $100,000 per year, but they can actually afford to spend $120,000 per year. Now, Voyant won't sell property to do that calculation. So if I change it to the assets chart here, remove the value of the home, we can see if they spend $120,000, money runs out. There's not a dollar left at age 90. And this will also work in reverse. So where you've got a client that's got red on the cash flow chart indicating cash flow shortfall, it might say, well, you can't spend $100,000 per year, but you can spend, say, $76,000 per year. Another insight you can run is the investment return insight, and this calculates what's the investment return required to ensure that there's no shortfall. So I've projected everything out at 6%. This is saying, well, you only need a return of 4.52% to ensure there's no shortfall. Or it might say you need a return of 8.7%. It just helps with your asset allocation discussions. If I switch back to the current position, where we do have cash flow shortfall, one other insight that you could run is the lump sum savings insight. So what this calculates is, well, what's the extra amount required at a certain date, let's say at retirement, to ensure that there's no shortfall. And what this is saying is the client needs an extra $328,000 at retirement to remove the red from that cash flow chart. And what you can do, you can break that down into a per annum figure by running the annual savings insights. This will calculate how much extra do we need to save each and every year between the dates that you set, let's say between now and retirement. So how much additional savings are required to remove that shortfall? We need to save an extra $31,000 per year. Now, if I click on the year view up the top right here, it'll take us to this screen, and this just goes into a bit more detail in terms of how the numbers are calculated. So from a cash flow, expenses, investments, and so forth point of view. And you can use this slider here to go to any year that you want. You can jump into the client's superannuation fund. So if we go into John's fund, this will show us how the closing account balance has been calculated. You can see the rate of return there of 6%, super guarantee contribution amount of 16,500, salary sacrifice. So it'll show any concessional or non-concessional bring forward downsizer contributions that you may make. It'll also calculate what the unused concessional amount is. So for those clients that you're looking to do catch-up concessional contributions for, you can do that. It'll also have the insurance premiums that you have inside super or also outside of superannuation. And the other way to check out the numbers, if I click on the reports here, there's a stack of reports that you can choose between. The best thing to do is just click them all, see what they show, and see which ones would work for you and for your statements of advice. So Voyant allows you to quickly visualize your recommendations and show the clients what their financial future looks like based on the strategies that you're considering for the clients. Voyant will enhance your advice process and the client experience and most likely become a very central part of what you offer. Voyant does provide a free 30-day trial, which I encourage you to check out, and they also provide amazing support and training